Hello, and welcome to the 7th episode of the Market Pulse series with FX Pesa. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be covering quite a lot of stuff. It's one of my favorite sessions during this period of the year. I try to focus on the Santa Rally, and this is basically the movement of the markets as the markets approach the end of the year. So sometimes we can get quite a lot of noise in the markets. Sometimes it can be rather quiet. That is as investors withdraw from the markets, go on holiday. So it's basically markets trending on low liquidity. So before I make any further progress, I would like to basically do a mic test. So if you can hear me clearly, kindly type hi on the live comment section. And these will confirm that everything is working just fine. So hello, Francis Ochieng, and welcome to the session. So when it comes to trading, it's rather simple. You're always trying to look for trading opportunities whenever they present themselves. So it's basically a waiting game, looking for opportunities, and when they arise, you capitalize on that and make your money out of that. So that being mentioned, I would like to begin with one thing. First, if you are very new to trading, then you should know that we have a free course available for you. So the only thing you have to do is to go to YouTube, and once you get to YouTube, search for FX Pesa. I'm going to show you this practically. So once you get to FX Pesa, click on the channel, and then scroll through the channel until you get this section where there is the Novice to Pro series. So it's a 10 episode series that I've done to basically help you transition from a beginner to a pro level trader. So it basically covers all the basic stuff that you need to know in order for you to get started. So it covers right from introduction, what is Forex, getting to register for an account, downloading the trading application, installing, logging in, and getting set up. So it will literally take you through executing your very first trade on a practice account, understanding what candlesticks are, charts, building a trading strategy, risk management, and all that. So this is done within a short period of time, and this is just 10 episodes. So remember, you just don't watch them continuously. So after, let's say, you go through the first episode, try and practice those ideas, get to make sure that you have grabbed that skill. And once you understand that, then move on to the next episode and keep doing that up until you get to the last episode. So once you've covered these, then you'll be good to go. And that's not the end of the journey. You need to do more research, more analysis in order to realize your own strategy and start trading successfully in the markets. So now that you've mentioned that, I'm still waiting to see if there's a response on this. So just checking to see if there's a response. So if you can hear me clearly, can you type hi on the live comment section? And these will confirm that everything is working just fine. So I'd like to acknowledge that today, for the entire day, we have had a blackout in the entire country. So I expect a majority of you are still having some issues with electricity, but that's fine. The power is back, so we proceed as expected. So that being mentioned, the Christmas trading period can be pretty interesting. It can come with a lot of opportunities, and at the same time, it can also be boring as the markets tend to trade on a lower volume. So whenever there is low volumes in the markets, there's a couple of features that you may experience. So one of the features that you may experience trading on a low volume market is that the spreads can be a little bit wider. So for instance, if you're trading the Euro USD, the spreads are usually close to zero, basically 0.0, 0.1, 0.2, 0.3 pips. But then when it comes to the Christmas period, you might experience heightened activity where the market is often making smaller movements. The spread is a little bit wider, but also it can be very unidirectional. That is, the markets can be trending, moving along one direction, and that's what you want to trade, especially if you are a momentum trader. So a momentum trader is a trader who basically follows the momentum in the market. So they are more interested in a trending market. So you want to see some trend happening in the market so that you can participate in that direction. So if you look at the S&P 500 and how it has performed over the year, This was last year in December, and as you can see, the market was majorly unidirectional, going down for the better part of the year. And then in the last 1, 2, 3, 4 days of the year, there was what we call the Christmas rally. So the Christmas rally or the Santa Claus rally is a common term where the market tends to move. Majorly the S&P 500 goes up in the last 5 days of the year. So you can see the last 5 days, the S&P 500 was generally going up right after Christmas, ended the year here. And then since then, you can see January market went down, up, down. And then from here, the bear market was confirmed. And for the better part of the year, the S&P 500 has been on a bearish momentum. So besides this, it's also important to notice that the establishment of this bear trend started from December last year. So December trading can be the basis of particular trends taking shape within a year. So if you look at the movement here, majorly, we have had very strong bearish momentum and some very predictable swings, market moving up and down along these two trend lines up until the current price level. So right now, as we speak, the S&P 500 seems to be quite bullish. And this is something that has been happening since last month. So last month, the market managed to bottom here and then rallied very well. This month started on the lower side before progressing higher. And now we are headed to a very important price level. And this is along the yearly trend line. And price levels of around 4,125 seems to be the new target. So along this target, you can see how the market has been trading in the 4-hour chart. So clearly, I'll try and make this as clear as possible. So this has been the path that the market has been following, acting as the floor or the support in this market. And the resistance seemed to be taking shape somewhere along this curve. So let me try and lock the chart. So here is our trend line. So closer. And now you can clearly visualize the bullish momentum and where it's headed. So 41.25 price level, that is the price of the S&P 500, seems to be a key target. You can see the strong momentum here has lasted for about 7 weeks, and potentially we are looking at the market hitting this area here. So for the last series of traders who have been very bullish in the market, they are targeting around this area, the market to at least get to this particular trend line. And then once to get to this, there's a potential chance that the market will pull back or even it will accelerate in December. So a key price to watch in the S&P 500 seems to be 41.25, and we could see some further upside. So once you get to that level, we don't know what will happen, but we do know that there's a good chance that the market will continue with the rally, or we could even see a pullback. So the last 5 or 6 days of the year seems to be strongly bullish. So if December, the market was to pull back down here, then potentially a rally could emerge on the lower trend line and could see the market closing somewhere around 41.25 as we approach the next year. So 41.25 price level seems to be a real nice target for the S&P 500. So let's look at other markets and see how they have been performing. And this is in relation to the Christmas period or the Santa rally. So hello, Peter Oloch, and welcome. Thank you for joining the session. Hopefully, we'll be able to create value together and get to grow. So on the other hand, if you look at the currencies, I'll start with the Euro USD. So Euro USD was basically bearish, and this is for the better part of last year. So nothing had changed towards the end of the year. The highlighted part here represents the performance of the Euro USD during December. So the trend was clearly bearish as a result of the fundamentals that were indicating that the Fed was aggressive in reducing quantitative easing in preparation for rate hikes that eventually started in March. So you can see that in early December, the market went up, got to resistance, dropped all the way down before pulling back up. And this bullish momentum here was also a Christmas rally. So immediately after Christmas, you can see that the market had a very strong bounce and rallied all the way up. towards the first 2 or 3 days of January this year. So now we are approaching another period. This is a little bit different because now we are seeing the opposite effect in central bank policy. So what we are seeing is that the central bank of the US is looking to reduce interest rates, hike. These are hikes that have been happening for the better part of the year, strengthening the dollar. And the ECB, or the European Central Bank, has not been doing the same. So they have not been that aggressive in raising rates, resulting in a much lower valuation in Euro USD. However, as we approach the end of the year, we have seen some policy changes where, on one hand, the ECB is looking to do some tightening in order to control the rising inflation in the Eurozone. And for the US economy, they're looking to reach a peak interest rate level of around 5%. So currently, the interest rates stand at 4%. And in the December meeting, we're expecting some smaller hike of about 50 basis points, which would take the interest rates to 4.5%. So some further smaller hikes in January, February, and then eventually once you get to 5%, we expect the interest rates to remain there in preparation for rate cuts later in the year. So as per now, we are seeing a very strong recovery in the Euro USD. Remember, the Euro USD was trading below parity some time back. And parity is basically the level where the €1 is basically equal to 1 USD. So around this price level. So you can see for like 2 months, the Euro USD traded in below the US dollar. And this was basically a multi-year low. And we are seeing a very strong reversal of this particular trend. So if you go to the forward chart, you can see the bullish trend has already started emerging, where from the lowest price level we saw, the lows are now getting higher. And if you look at the highs in October, compare these with this other one, and then the most recent one in November, it seems like a market which is strengthening. So after breaking this particular trend line, market went up, went back, retested the trend line, and then kept pushing higher. So we could see the Euro USD begin to recover. Remember, it has been on a bearish market for quite a period of time. The last time the Euro USD was trending higher was all the way back in, this is January 2021. So for 2 straight years, the market has been bearish, the euro continuously losing to the dollar. So if you look at the strong momentum here, right from the bottom, then there's a good chance that the Christmas rally will be in favor of the euro against the dollar. So in this case, there's that potential that we could be seeing the euro make some strong recovery or a strong rally against the dollar, and you have to be prepared to look for the opportunities they are in. So the opportunities may lie in the pullbacks. So whenever this market pulls back, then you might be able to squeeze in some bullish positions. So as we proceed with the session, you should know that this is not investment advice. This is purely educational to help you understand some of the key concepts around trading during the Christmas period. And once you understand this, then you'll know to practice proper risk management, do further research before making your own independent decisions. So a very strong rally here. You can see this week started bearish, bounced here and rallied very well. So currently the euro is testing a very strong resistance level here. So if you manage to break this, you could see the price moving higher. But if the price moves back downwards, then there's also that opportunity where the market could start trading in a sideways manner. So we can already see some form of pattern happening here. Could be a triangle. Sorry, let's try and draw this properly. So we could see some sideways momentum here, where the market could just be moving sideways, waiting for volume to come back in the new year. So as for now, I'll be watching this particular level closely. That is 1.0446. So if the market manages to break this level, then there's a good chance we'll be seeing some further upside in the euro recovering against the US dollar. So if the price manages to break towards the upper side, then there's this potential that we could get to the previous high here. So the previous high, which was also a bottom here, is 1.078. So there's a good chance that a break above this level could see the price moving all the way up. However, if the price doesn't manage to break this level, then we look at something along this triangle here, where the market could pull back, bounce, and keep trading sideways. So that's one of the things to keep notice of. So at the same time, you should know that the central banks are not yet closed. So we'll be expecting a December meeting from the Fed. So if they hike by 50 basis points, then that will be largely priced in. So investors will not be focused on the rate hike itself. They will be focused more on the outlook for 2023. So in the next ECB press conference, sorry, not ECB, but FOMC, or the Federal Open Market Committee, we'll be waiting to see how the market performs and also the direction that will be given by the Federal Open Market Committee. So if a lot of the members will be satisfied with the current economic conditions in the US, and they will be satisfied that the inflation rate is moving in the right direction, then we might start seeing some dollar weakness, and dollar weakness basically implies that the Euro USD continues trending upwards. So we have been seeing some dollar weakness for quite a while now, and these may explain why the Euro has been gaining against the dollar since hitting this particular bottom. So same case with pound USD. You can see how it was trading last year in December. So in the early days of December, it was strong against the dollar. Then the dollar gained strength against the pound. So one key thing to notice is the candlesticks are relatively small in size. So this is something that is pretty much important to understand. There's not much volatility, but there's a unidirectional movement. So if price is going down, it's down continuously day after day. If it's going up, then it's up continuously day after day. So these can create some very good positions that you can hold for a couple of days or even weeks, especially if you're on the right direction in the market. So since then, you can see that the pound continued losing against the dollar. But then one key thing to notice is that that particular trend has now ended. So what we are seeing in the market right now is that the dollar is now weakening against the pound as the pound makes recovery from an all-time low against the US dollar. So in my career in trading, I've never seen the pound trade this low against the dollar. So this was a multi-year low, 1.032. So at this point, there was a lot of speculation that the pound could also go down to parity. But now that we are looking at a potential change in Fed policy, then it favors a bullish momentum. And we already have an established channel already shaping up in pound USD. So you can see the sequence of lows on the 4-hour chart. So they are following this particular path. And on the upper side, you can see the sequence of highs that the market is currently breaking. So now that we can see, it's clear that the pound has taken a bullish momentum against the US dollar. Right now, as we speak, it's testing a pretty important resistance level. So if you basically zoom out, you'll notice that there was a major resistance around this area. And this is a price level of around 1.22865. So a lot of investors will be looking to capitalize on the currencies recovering against the dollar. So in this case, with the pound looking to potentially hike interest rates and get more aggressive to fight inflation, then the pound could start strengthening against the dollar as it has been doing in the last 7 weeks. So a nice target around 1.22865 might be in order. However, if there is a pullback, then there is still opportunity to even look for more bullish positions. So as for the Asian pairs, they also tend to trade in a unidirectional way. So for AUD USD, clearly it was not unidirectional during this particular December, that is last year. So you can see a lot of movement down and then up and then down and then up. So this time will be more focused on our policy. So policies are very important because they can drive or determine the direction of the markets. So already the market is looking to test a major resistance level here. And we all know this has the potential to bear a binary outcome. So by binary, I mean that we could see a straight out breakout where the market keeps going up higher to the next high. So the previous high in AUD USD seems to be 0.71333. So this could be a nice target. But then if eventually the Fed decides to be very hawkish, then there's still a chance that the AUD/USD could continue pushing back down. However, it seems like the end of the trend, especially considering Fed policy and the direction that the interest rates are taking. So at some point, there's a good chance that we could see a break happening here. So remember, the key rule, especially when you're trading such strong trend lines, the more a trend line has been tested, the easier for it to be broken. So as a lot of traders develop confidence in these trend lines, when the market gets to a trend line, there's a good chance that it will break. So the first chance, there's a lower chance of breaking, second time, a lower chance of breaking. And the higher the number of times the trend line has been tested, the higher the chance of the market breaking that particular trend line. So trends don't last forever. The markets are always cyclical. On one time they are bullish, the other time they are bearish. So now as the market gets to this particular trend line, there's a good chance it will break and keep going up. So as for now, you can see we're already testing last week's high. So the market could eventually push and get to the trend line and perhaps even trade higher. So the shorter term target is 0.68251. So we could see a short term target this week, the market just rallying and getting to this particular level. So on the contrary, it could also pull back and get to the lower trend line. So if you go to the 1 hour chart, you zoom out, you notice that there's some form of trend following this particular path. So if the market was to pull back, then this particular trend line could be a nice guide on where the market might bounce next. So as for now, I remain bullish on AUD/USD as these currencies continue to recover against the dollar. So if you have any questions or suggestions, feel free to raise them, and I'll be responding to those questions and suggestions as we go. So another key thing I would like to mention or highlight is that stocks can historically do so. So it's not just a case of just last year, but if you take quite a number of years, for instance, from 2011 through to 2021, this is a sample size of about 10 years. So with 10 years, you can see the average performance of the S&P 500 index. So 2011 to 2012, it gained 1.9%. And this is the last 5 days of the year. Then, if you look at 2012, gained 2%, 2013, 0.2%, whereas 2014 dropped 3%, 2016, 2.3%, then 0.4, 1.1, 1.3, 0.3, and 1%. So it's clear that there is a strong directional movement called the Santa Claus rally, and this often comes as a result of the market having lower volatility and lower liquidity. So prices tend to take one particular direction. So in this case, you have to be prepared for these, because when these markets rally, especially if you've been down for the better part of the year, this might represent the opportunity for you to break even or even make more money or more returns from your trading. So this is something that has been observed over time. So I'll show you just one more link. So this one has taken quite a number of samples. So this one compares the average daily returns for 5 trading days before and after Christmas for 2 subsamples between 1950 and 1989. This is 40 events. And 1990 to 2020, this is 31 events. So this chart has no variable ranges and uses a finer vertical scale than the preceding one. So the subsamples mostly confirm strength just before the holiday, and for a few days, one after, but subsample behaviors do differ. So you can see the average change in the S&P 500, right from a big gain of 0.5% and a big drop of 0.3%. So for 1950 to 1989, this one is highlighted in blue. You can see a majority of the time the market was trending upwards with only 2 years out of 40 events where the market was trading downwards. Then the orange bars here represent the period of time where the market was trading upwards, and this is majorly 31 events between 1990 and 2020. So clearly, you can see a majority of the time the market was trending upwards. So only one event where the market went down. So that is something that is you have to be aware of. So the other key thing is that as the markets approach Christmas, a majority of the volume that is traded comes from banks. So banks contribute out of volume in the markets, and whenever they close, then there is lesser liquidity in the markets. So what a majority of traders will do as we approach the Christmas period, they also close their trading and go have some holiday, go enjoy their profits, or go plan, relax, and plan for the next year. So the action of closing their trades basically means the prevailing trends taking a reversal. So for instance, if you look at S&P 500 and how it performed last year, it was the end of a bullish trend. So if I go to the daily chart, you can see the bullish trend had lasted a couple of years, especially since the bottom during the COVID-19 period. So the market managed to go all the way up, pull back a couple of times, and kept going up until December. And this is December 2021. So once the market got to December, as the traders were going for holiday, they closed their trades at a high. They knew that this was it. And as they closed, they basically sold their shares, thereby pushing the S&P 500 back down. So profit taking is something that you ought to consider, especially when you're trading during the Christmas period. So if something has been strongly moving in one particular direction, traders will tend to take profit and go for holiday. So that action of profit taking can push the prices back down. And if it was a bearish trend, then it will generally push the prices back up. So what does this mean for Bitcoin? So Bitcoin has majorly been bearish for the better part of the year in correlation with the S&P 500. So this basically means that if someone will be doing profit taking, the profit taking will be from the short selling positions. So a lot of participants in the market have been having short selling positions. So with the short selling positions, if they take profit, then they'll be buying back. And if it's buying back, then we expect some form of Christmas rally to be happening. So currently we are trading at a multi-month lows. So it has been quite a period of time where Bitcoin was majorly trading sideways. So if you just look at the highlight here, and this is from June this year. So June, July, August, September, October, and now November, the market was sideways. But for the better part of the year, Bitcoin So remember, last year in November, now it's $16,000. And with the prices this low, there's a good chance we might see some form of Christmas rally. So there's a good chance we could see Bitcoin getting back into the pattern and rising all the way back to around 25,500, which has been acting as a major resistance. So sorry, not 25.5, but 25,185. This was the major resistance here. So there's a good chance this could be happening this month. So you just have to be observant and look at what price does within that period of time. So as per oil, we know that oil has majorly been bearish this year. So there's a lot of news that out there have been saying that oil has been bullish for the year, but no, oil has not been bullish. To be honest, oil was only bullish for the first 2 months of the year. So last year, you can see it was on a bullish momentum in December. So those people who are basically selling in November took their profit and the market started moving upwards. So DEC, January, February, March, this was a big, big rally. And you can see that it basically began in December. So a very strong push right from the beginning of December to the high in March, which can be estimated to be around, let me check here. So this is a rally of about 90% in oil prices. So this happened for a short period of time at the beginning of the year. Since then, the markets pulled back, traded sideways during the early months of the year. This is March, April, May. We got another high here. And then since the high that we saw in May, the oil prices have majorly been going back down. So the overall trend, and this is from May, is clearly bearish. Oil has been losing in terms of price for quite a good number of months. This is the 6th month consecutively where we are seeing more pressure pushing oil prices back down. So from a high in June of around this price level, this is $120 per barrel. Right now, as we speak, the market is testing the bottom, and this is $75 per barrel. So what does this mean? What this means is that as the market has been going down for quite a good number of months, there has been quite a number of factors contributing to this. And for US oil, one of the major things has been the president, Biden. He basically passed a bill that would draw a lot of oil from the US oil reserves. It would flood the market and push the prices down. So this particular bill was set to end in November, but there was an extension of 1 month, and this has led the prices to keep going down up to the current level. So at some point, the US will run out of reserves and it will start to restock. So this basically means a fundamental change in the supply of oil, and this could be a key factor supporting bullish momentum. So at the same time, there's also the traders who have been participating in the bear market. So the traders who are following the fundamentals and shorting oil for the last 6 months, as they go for holidays, they will be looking to take some profits. So profit taking for short sellers would mean buying more oil, and this would present an opportunity for oil to rally, perhaps towards the previous high, which seems like a major thing here, which was the high of last month and also the high of this month. So if price manages to bounce around the $75 level, then there's a good chance we could be seeing the price jump and move back to the $92 level or even higher, depending on the fundamentals that follow after that. So that's a key thing to follow in the developments in the oil market. So for the FTSE 100, this is the most popular stock market index in the UK. You can see it has been on a bearish trend with very wild swings. So some of these swings since last year have been following this path here. This was the lowest price. This is in February, and this was the lowest price last month. So big swings happening in the UK stock market. And now, since the market has been moving towards the upper trend line, you can already see that it's already facing some major resistance here. So yesterday, very strong rejection of that particular level. And today seems to be testing the same level. So clearly, you can see here the market slowing down on this particular trend, where the market was moving sideways last week. So on the 1 hour chart, yesterday, a rejection, today an attempt to go up, which still failed. So this could be proving to be our resistance for the UK 100. And at some point, there is that potential that the market could now start moving back downwards. So remember, this particular rally is not supported by fundamentals. So this rally that we saw here, the market continuously moving upwards, and this is the UK 100. It's not like the UK companies are all that profitable and everything is good. The consumer is really hurt. They are currently struggling with the energy bills and higher consumer bills as a result of the high inflation environment in the UK. So with this in mind, then you should know that this rally is bound to end at some point once the effects of inflation start being felt within the UK economy. So if the Monetary Policy Committee decides to keep hiking interest rates, then there's a chance that this could be the top for the rally and the market will start going down. So another key thing to notice, as I mentioned earlier, is that whenever there is a strong rally and one particular trend line is continuously being tested, this is our trend line acting as support here, and then support kept being support. The more the data points, the higher the chances of the market breaking that particular trend line. So at some point, the market will break this trend line and start moving back downwards. So a break of this trend line could be a signal that the market is now taking the bearish momentum, and it could present you with an opportunity to go short in this particular market. So as we head into the Christmas period trading, I'll try and summarize these. Spreads might get wider. That's one thing that we're expecting. The other key thing, rally in the US stock market is quite common. That is the S&P 500. The other thing is profit taking. A lot of trends that have been established for the entire year have represented a lot of opportunities for traders. And when they take their profits to go for holidays, they move the trend in the opposite direction. So if a lot of traders have been benefiting from this upwards trajectory in the UK 100, once they break for Christmas, they'll be taking some profits and basically selling off and pushing the market in the opposite direction. Now that the market is trading at a major resistance level, then a reversal is expected. So for the S&P 500, it's also approaching a similar level. Remember, this is the yearly trend line. So if the market gets to 41.25, then there's a good chance that you'll be seeing a reversal here. So this marks the end of the presentation for today. I hope you learned something for today. And I hope that we will be having another good session before we end the year. So this seems to be the second last week of the month. So we'll be having another session next month. And once we get through that, hopefully we end the year on a positive, and then we'll look for opportunities back in January. So any questions or comment for me are also very welcome. I'll be responding to that right away. So a good question. Hello, Rufas. How can I start from scratch? This is from Young Million. So the way you start from scratch is going through the Novice to Pro series. It has 10 episodes. It's available on the FX Pesa channel. So I'll be sharing episode 1, go through it, and then transition to the other episodes and practice as you progress with that. So I've just shared the link here. So how do you find trade setups every day? This is something that I've covered in the series. So if you haven't gone through the series, kindly try and do that. The link is in the comment section. Go through episode 1 to 10. It will help you understand how I derive some of the trading setups for the day. So still holding for 4% Fed. Looks like they have agreed to cut rate based on the S&P 500. I beg to disagree with this. The 4% Fed rate, they're still saying that it's not restrictive enough. And this is as per the Fed meeting minutes that were released yesterday. So a lot of members within, or basically a majority of the members, decided, which is in writing, that the interest rate policy is not yet restrictive enough, and they are in favor of a 50 basis point hike in December. So this is something they have already put as a forward guidance. So the market will be pricing this in and now focusing on the next. So as per the December interest rates, I think they will be more focused on a smaller rate hike from the previous 75 basis points, which they have done in the last 3 hikes. In this case, they will do a smaller hike and see whether inflation keeps on moving in the right direction. So with this happening, 50 basis points, that would get us to 4.5. And that's way closer to 5%. So by the time we get to 5%, the news will be already priced in, and the markets that have been trading at all-time lows, they will have already started to recover. So now we are seeing other central banks being more aggressive to hike rates, whereas the Fed is reducing its aggressiveness. So a reversal in the dollar strength. So we might see some dollar weakness against other currencies that will be strengthening as a result of the aggressive tightening that might be happening in early next year. So that's my opinion though. So we have same setup. I'm still holding before Fed decide to cut rate, leaving the market on deck 8. So this is from Emperor Traders. Thanks for the comment. So the thing is, they are still looking to hike rates. The interest rates are still very high. So at 7.7%, it's still way higher than the Fed target, which is 2%. So there's still more room to go. I expect some more hawkish comments from the Fed. So there's another comment here. Do you find trade setups in every day of the week? And do you open higher or lower timeframes? No, trading setups do not come up every day of the week. Sometimes the markets are just there consolidating and there's nothing you can do about it, but wait for the right moment to enter. So trading setups don't always occur every day. So the other question, do you open on higher and lower timeframes? No, I basically do a top-down analysis. So when it comes to analyzing a currency pair, for instance, the current chart we are seeing here is the S&P 500 rally. So clearly we have a target at 41.25. And now if you go to a smaller time frame for our chart, you can see that we are in a bullish momentum. So it gives you an idea of where the market is headed. And if you move to an even smaller time frame, the 1 hour chart, then you can see the much smaller consolidations. For instance, you can see this was happening a couple of days ago, where basically the S&P 500 was moving sideways in what looks like a symmetrical triangle and a break here. So we are basically trading within this area, or within this period here, where the market had a break. And now, if you look at today's price action, it's self-explanatory. The markets are closed today. Today is a Thanksgiving Day, so there is a very little or no momentum in the market as a result of there being a bank holiday in the US and a lot of traders taking a break to enjoy the holiday. So as the markets open up tomorrow, we'll be focusing on the Black Friday. Remember, the Friday after Thanksgiving Day is Black Friday. So this is when you'll be seeing a lot of discounts from a lot of retail chains. This could be on Target, McDonald's, could be on Amazon, Apple, and many other stores in the US, as well as across the rest of the world. So even here in Kenya, we'll be expecting discounts from these retail chains on Black Friday. So this could cause volatility, especially in retail stocks. So a lot of investors will be tracking the data to see the numbers. So if there's more and more sales happening on Black Friday, then these stocks could rally, especially if they beat last year's numbers. So besides these, we expect volatility to start slowing down. And then maybe on the next Fed meeting, we could see some volatility. And then after that, we could now start focusing on the New Year movements. However, the key trading asset will always be the S&P 500. So a lot of traders I know will be focused on the S&P 500 and how it performs in the last 5 days of the year, and also the first 2 or 3 days of next year. So thank you very much, guys. Thank you for your questions and for your participation. I hope to see you guys on the next session. So good work, Rufas. Keep the good work. Thank you, Matt. I appreciate this. Enjoy the rest of your evening.